Hey, how's it going, everyone? Welcome to Finance with Avrin. In this video, we're getting into something interesting. President Donald Trump's $100 million bond buying spree in 2025. We're going to get into a lot of the investments that he's been investing in with his wealth, not him personally. We'll get into the disclosure and everything, but it's very interesting to see where big money is being spent and, of course, big money of people in positions of power. Now, $100 million to me, that's a lot of money. To somebody like Trump, might not be that much money. You know, he's worth billions. So in this sense, but it's spread across. There's a lot of transactions. We'll get into the details and everything in here for sure. And I'm gonna tell you also what a bond is if you're unfamiliar with that in the video, organized into sections. Let's jump right into it here. First, starting with the disclosure overview. Now, this disclosure was released in August 2025, actually this week, just about a day or two ago. There were over 600 transactions total on these documents. They're split into 3 different documents on the OGE.gov website. Now that's going to be the Office of Government Ethics. So you are welcome, of course, to go on this website and see these disclosures as well as several others. There's a lot, but we're focusing in this video on President Trump's bond purchases of 2025. As you see right there, there's one of the disclosures, several transactions, hundreds. Then there's another one with a few on there. And then there's another one with over 100 on there. So over 600 transactions total between January 21st, 2025 and August 1st, 2025. Now, January 21st, that is the day after inauguration of when he became president. Now, the bond types included in these purchases are corporate and municipal bonds. We're going to get into more details of those. 100 million overall, several million in corporate bonds, and the rest diversified into hundreds of municipal bonds. No exact figures per city, per project, but it's like a range that they give. As you see on the disclosure right there with the corporate bonds and the municipal bonds, there's like a range right there you see. And we're going to get into some of those ranges in the video as well. Now, the federal financial disclosures don't require exact numbers. And these investments that we're going to talk about in this video that you see in those disclosures, they are managed by third-party institutions. So not Trump or his family directly. The third-party institutions are what's handling them. It's kind of hands-off for Trump. I'm sure, but maybe there's some kind of approval or, some kind of talk of regard, like maybe I want to, focus on this or something like that. But like specifically the transactions themselves are handled, managed by third-party institutions. Now, under federal law, the president and vice president are exempt from some regulation relating to conflicts of interest among federal officials. So we're going to get into some more specifics here. Of course, all of this video unbiased, no drama here. We're going to stick it to the facts. Let's get right into it some more here with the Trump corporate bond purchases. Now, what are some of the corporations that Trump has been investing in through bonds? Of course, through the third-party institutions, not directly. Now, one of them here, United Health. The range for that bond purchase is between $500,000 and $1 million. Now, United Health, major healthcare and insurance company right there. Then we have Qualcomm, bond purchase of between $500,000 and $1 million. Qualcomm's known for semiconductors and tech. And then we have Home Depot. Bond purchase of between $500,000 and $1 million. Home Depot, probably very familiar with that. You may have been in there recently. I was. They are, of course, home improvement retail. And full disclosure, I do own Home Depot stock. Just recently actually got back into the stock and I'm up about 10%. So yeah, Home Depot, one of the bond purchases. And then we have T-Mobile US, the bond purchase of this one between $500,000 and $1 million. T-Mobile, you're probably familiar with that, wireless and telecom, the cell phone provider. And then we have Meta Platforms. That bond purchase was between $250,000 and $500,000. Now, Meta Platforms, you're probably very familiar with them. They own Facebook, Instagram, WhatsApp, Oculus. So, social media, communications, and tech. Major company. Full disclosure on Meta Platforms, I own this stock personally. I am up around 32%. I should be up way more than that because, long story short, I got into that stock when it was hitting lows, like around $100, and then I ended up selling out for a little profit. But yeah, I'm not going to get too much into that. Got back in it and I'm up. But yeah, Meta Platforms, one of the bond purchases of President Trump. Now, other corporate bonds that were bought were ranged between $100,000 and $250,000. And they include the following companies: Citigroup, Wells Fargo, and Morgan Stanley. These right here, banking, financial services, wealth management. You're probably very familiar with them as well and what they do. So those were the major corporate bond purchases with President Trump. Now let's move over to the municipal and regional bond purchases. Now, these were spread out. There were a lot of these transactions. These were the bulk of like the transactions. Now, the corporate bonds, there's like one line for each one of those, here and there like that. Now, the municipal and regional bond purchases, several lines of this. I'm just giving you like a couple of examples of these right here. Now, got it broken down into sections here. Education, school district bonds. Examples of some of these bonds that were bought are the Hamilton, Ohio School District, the Johnson City, Kansas School District, and the Danville, Virginia School District. And there are definitely several others as well. Now, also another type of bond that was purchased with Trump, healthcare, hospital authority bonds. Some of the examples, Orlando Health, Maryland State Health, Colorado Health Facilities, and Michigan State Health. And of course, there were multiple others. If you're like wanting to know, was the school that you're associated with, or healthcare company or utility company or something, were they one of the bonds that were purchased? Go to that website, you can search for, try to search for the city or the state. Some of the words have kind of like condensed, like health is like usually HLTH. You can control find and look for certain things if you want to. Now, another type of bond that was purchased include utility bonds, gas and water district bonds. Some of the examples of these, Lower Alabama, Kentucky Gas Supply, Philadelphia, Pennsylvania Gas and Water, and Paris, Texas Water, as well as several others. Now, there were some transportation bonds as well, airport transit bonds. Some of the examples, Houston, Texas Airport, the Alaska Airport, and the Minneapolis, Minnesota Airport. So very interesting to see the origin of some of these bonds, where they're at, the different schools, the different hospitals and health facilities, the gas districts, the transportation. So it's really interesting to see where money is going with the bonds, So let's get more into what are bonds. Now, a definition of a bond is a loan. You're lending money to the government or a company. They pay you interest or give you some kind of discount on the bond. We'll get to the different kinds, and they return your money to you at maturity. And of course, there's short-term and long-term. We'll get more into that. But basically, a loan, interest can be involved, paying back the money at the end of maturity. So however long the loan is for, a few months, few years, however, then the money gets returned. And so that's basically a condensed definition of a bond. Now, types of bonds and what they fund. Now, corporate bonds from companies, they can finance company growth or be used to refinance debt. Some examples, like Home Depot issuing bonds to open a new warehouse. Now, there's also municipal bonds. These fund public projects. Examples of these, a city issues a bond to build new schools or repair roads. And then there's also treasury bonds. These fund federal programs. Examples of these, U.S. Treasury bonds covering defense, Medicare spending, a range of different things. Think of something that the government's involved in that they spend money on. They'll try to, have a bond for that. And now, why do the investors buy bonds? Bonds are typically safer than stocks, and also they provide some steady income and diversification. So it's like when people want to invest in something, a lot of portfolios out there have a mix of investments that include bonds, stocks and bonds and short-term this, long-term this. So you have, various type of ways you can diversify your portfolio, and bonds are one of those ways that are typically pretty safe, and they provide some steady income or steady return. Now, of course, some bonds are safer than others. They have credit ratings and, different things that back them, some things that don't back them. We'll get into that as well in that section. But yeah, there are a vast variety of bonds out there. Now, bonds lately have had some attractive yields in 2025. Many corporate and municipal bonds are paying between like 4 and 6% annual returns. So that can be definitely attractive. And of course, on this channel, I make several videos about high yield savings accounts and CD, certificate of deposit accounts. And those APYs are in that range. Typically, they have been in the past year or so. Definitely, they've been fluctuating on that downward trend currently. If you've been locked in on the channel, you definitely know where the yields have been, where they're at, and where they're possibly going or are currently going as well. Definitely. But yeah, so a nice attractive yield for a lot of bonds is out there and available. Quick example of this, a $1 million municipal bond at 5%, that's like $50,000 of yearly income. That's an example of, the return that you can expect out of some bonds, depending on the money. Of course, now for a safer type of investment like a bond, typically the more money that you have involved in it, the more money you can expect to have as your return. Now, of course, with a safer investment like a bond, typically the more money that you have involved with it, the more money that you can make with it. Now let's get into how you can actually invest in bonds. If you're kind of curious, you haven't invested in bonds before, you see some of the bonds that are being bought in this video by President Trump, you're like, maybe I want to get into some bonds, diversify my portfolio. Now there's definitely a chance that you're already invested in some bonds via your retirement accounts. If you actually look and see what the retirement account is investing in, maybe you're already familiar with that. Maybe you already picked it out. Maybe you leave it up to someone else, or just a broad type of mutual funds and ETFs that, came standard default with your retirement retirement account. Maybe you've changed some things, but if you look into the actual holdings on a lot of those, you'll probably see that there are bonds involved, especially if it's like one of the safer type of investments, a mutual fund and things like that. Sometimes they have them inside of a mutual fund with stocks or ETF with stocks. Now, of course, there are separate bond ETFs and funds as well. Now, if you wanted to buy US Treasury bills and bonds, you can buy them directly at treasurydirect.gov. And now Treasury bills are short term, typically, weeks or months for those. So short term for Treasury bills. For Treasury bonds, think of those as more long term, typically years and decades. Now, bonds typically pay fixed interest. Think of it like a CD. So you know how CD accounts have a fixed interest, fixed APY that stays the same for the length, the term of the CD. For Treasury bonds, that's typically the same. For the length of the bond, it's going to be a certain percentage tied to it right there. Now, for Treasury bills, they're typically sold at a maturity discount. Now, for an example of this, say you paid $980, and then at maturity, at the end of the Treasury bill, when the term is up, you get $1,000 back. So basically, you get that $20 basically. Now, in this example, of course, there's a range of, prices of these Treasury bills. Depending on how much money is involved, depends on how much, the return is typically. So usually with, a lot of Treasury bills, the bigger the Treasury bill, the more you can make from it, even in that short term, because the discount would be greater in a sense. So those are US Treasury bills and bonds, how to buy them. Now, municipal bonds, cities, states, and projects, you can buy those through brokers, like Vanguard, Fidelity, Schwab, brokerage accounts, or, via the municipal bond ETFs. Now, your investment with these bonds can basically fund schools, hospitals, roads, or airports in your community or in another community. And then also there's corporate bonds. You can purchase these individual bonds or ETFs through brokerage accounts. Now, the bond ETFs and mutual funds can be used for diversification, like I was telling you about. Now, there are several companies out there that offer bonds and also several bond ETFs. Now, two of the major bond ETFs that I've been looking at a little bit lately include the BND, the Vanguard Total Bond Market ETF, and the BNDX, which is the Vanguard Total International Bond ETF. Of course, there are several others, but yeah, those are some examples and ways that you can actually, as a regular investor like me, invest in bonds if you wanted to. Now, also, what backs a bond? Now, if you're wondering okay, if I put this money towards the bond, what's going to guarantee that I get my money back? For Treasury bonds, the US government, these are basically considered risk-free, in finance because they are backed by the full faith and credit of the United States government. And the United States has never defaulted on treasuries. So that basically means there's never been a point where the US government was like, hey, that bond that you had from us, that loan right there, that money that, you gave us for that project, for this or that, we can't pay you that back. We kind of had a little bit rough out there. The US government has never stated that. They're going to do what they have to do to pay you back that money, basically. So if they got to turn a money printer on or something, US government is typically a risk-free type of bond, the ones that they offer. So those are Treasury bonds. Now, there are also municipal bonds. General obligation bonds, known as GO bonds, they're backed by the taxing power of that city, state, property taxes, sales taxes, ways that, regions make money through taxes, and that's how they can pay back bonds. So funds are just kind of moving around like that. Then there's also revenue bonds, and these are backed by the revenue from a specific project, the airport fees, the toll rolls, water bills, different things like that. So municipal bonds. Then there's corporate bonds, the companies. They're usually unsecured. So they're only backed by the companies promise to pay, which can also be broken down somewhat to their credit rating and their cash flow. If the company has a nice credit rating and brings in a lot of cash flow, there's a good chance, they're going to be paying back those bonds. They got money coming in. They've got great credit. They could take out some money somewhere else if they have to pay you back that, for the bond and everything, or they just use their cash flow. So typically, corporate bonds unsecured, but there are ways to kind of verify okay, that's a bond that's going to get my money back. I'm going to make some money from this bond and I'm going to get my money back on maturity. And then also there are sometimes secured corporate bonds, which are backed by specific assets like buildings, equipment, and revenue streams. Now, a risk factor with corporate bonds and also a slight kind of benefit, you could say, is that if a company goes bankrupt, bondholders are among the first creditors to be repaid. However, there's no guarantee that you'll get all of your money back. So somewhat of a risk factor is yeah, the company goes bankrupt, I had a bond in, I'm going to be among the first to get repaid if there's enough money to be repaid. So yeah, there's different research and factors that can be used to find safer corporate bonds. And that is it with my video about President Trump buying over $100 million in bonds, including what was bought, why it matters, and what we can learn from it. I hope you learned something from it, found it interesting, and that you enjoyed the video. Take care.